Good evening. Welcome to part two of my mechanical fair value series. If you're watching this as a standalone, there's a playlist. Just go to my channel. You'll find under playlists. There will be one just labeled mechanical fair value. It will have all of the videos. There's going to be three, I believe. And yeah, they're going to tell you everything that you need to know. It's really modular. It's really cool. So there's that. There's a playlist. In this one, we're going to be drawing the lines. We're actually going to show you how to draw in mechanical fair value. We're going to do that in the S&P 500. We're going to do that in the NASDAQ. We're going to do that in the Dow. We'll do that in the dollar index. And we'll do that in Citibank. That's right. This works in stocks and ETFs too. It's a universal thing that all of them do. All right. So let's get down to business. Okay. The first thing that we're going to do, we're going to go on the monthly chart. We're going to single out the past three candles, okay? The open, high, low, and close. And we're going to notate the open, the high, the low, and the close, okay? I'm going to do that in green because that's the color that I use for these. But you could do it in any color. I suggest you do it in different colors. That's just my suggestion, but that's all right. It doesn't matter, okay? So this is what we're going to do. We're going to take every single one of these levels. Now, some of these areas, it looks a little bit crowded. The thing is, right now we're doing the monthly levels, okay? While we're doing the monthly levels, they're very well, they're not particularly sensitive. I actually think they're the least sensitive. But they're very powerful levels. They really turn over price, and they're very consequential when they're reached, right? So we want to have every single one of those, okay? And we'll go down to the weekly. And don't worry, I'll show you when we're done. You can see, what is this? Is this the new month? Yes, that is the new month. Never mind. So on the weekly, we're just going to take the first candle. Now, I know in the last video, I said that the weekly look back is 4 candles, and the weekly look back is 4 candles, okay? So what's different? What is different about this one? If the monthly candles are all together, we're going to take all of their levels anyway, so why don't we do the same with the weekly levels? The reason is because these ones aren't as strong. So with the levels that are not as powerful, not as important, not as consequential, we really want as few of them on the chart as possible, and that's going to help us read them, okay? So what you can do, what I'm doing right now is I'm picking this first candle out of convenience. Now that's a choice. That is a selection, a valid selection out of 4 candles, okay? You can pick any of these 4 candles. Why? Because all of these are going to include sensitive levels, and really, you're not going to know which candles levels are going to hit, are going to actually be used, okay? So that's why, well, you can pick really any one of these. But you don't want to be putting too many levels on top of each other because it's just not very good. Okay, when we get into the S&P, when we get into the NASDAQ, I will show you some protocol for working with weekly ranges that do not overlap, okay? So the daily, okay? Are you ready for this? Do the high, and this I'm going to use white to differentiate it from the weekly levels. Open, close, and low, okay? So you notice I also did only 1 candle in this one, okay? The reason is obviously because it will be very, very cluttered if we did every single one of these daily candles. What I can do is I can also put this one, okay? If this wasn't already covered by weekly levels, I would actually, in fact, put this one. And in fact, just for rigor's sake, let's do that, okay? Now, the reason that I did that was because this range up here and this range down here do not overlap, okay? And they're kind of far from each other. So what that tells me, well, I'm sorry, that doesn't tell me anything. What that does is that really spreads out these sensitive ranges. Even though there are more sensitive levels inside of this, we really have to tune them out. We really have to tune into the most sensitive levels that we're most interested in, right? So as long as they don't overlap, you can just kind of throw levels on there, or you can ignore basically this whole look back. And as you can see, the weekly levels, they're covered, or they cover this area. So in reality, if I see this, I'm just not going to notate that, right? So even though there is supposed to be a range of 5 candles and their levels, I'm just not notating them because these levels are covered, right? And if there's going to be less consequential levels on top of these more consequential levels, I'm going to pick the more consequential level every time, every single time. So it's a no-brainer just to not put these levels on this candle. So as we go down, we can see that they are sensitive. They are sensitive levels. Even on the 15-minute, we can see that these levels make order blocks. Isn't that cool? And actually over here, this is the order block. It feels a little bit disingenuous to call this side that order block, but it's technically correct. I guess deal with it. I deal with it. I have to deal with it. So yeah, but this order block on this monthly level, see, that's also a way to validate it. So we'll get into it. Okay. So moving on to the S&P. Okay. These are the levels from the last time. We'll just clear those off, and we'll do the same thing. So this is a futures contract. With a futures contract, you want to use either the contract month. Hold on. You want to use either the current contract month or the contract month that you're back testing, and just use that. The reason is because if I can get all these on the chart. I know I have to concentrate on this. We have the settlement price. Okay, I'll go over that in 1 second. But the reason that you want the contract month and not the continuous contract, did I get all three? 1, 2, 3 right here, is because the continuous contract is actually using the wrong data. It's very good for measuring like trends and seeing highs and lows in the marketplace and all that kind of stuff. But these reaction levels specifically, they depend on the actual asset that you're trading. Okay. So if you're paper trading or if you're analyzing an asset and it's like a derivative and you're using a composite chart and all that kinds of stuff, you can't really use this concept. And the reason is because the actual levels of the fair value, they depend on the original data. So you're really going to need that original data. So also notice I looked down in the lower right hand corner and I saw that I have my settlement price on. I have my settlement price active. Now the reason that's very important is because that settlement price is the one that they're going to look at, the one they're going to pay attention to. So very, very important, right? Now here, let's actually go back in time and let's take a look at this, okay? Notice we can find this level, we can look at this level, we can analyze a chart based on this level the 50% level between the high and the low of any of these candles, not all of them together. But the thing is, it's not really as consequential as really the open, high, low, and close. So because it's not really as consequential, because it's kind of dodgy, it's kind of hit and miss. It doesn't know a whole lot what it's gonna do once it reaches one of these levels. I don't like having them on my charts. It's more like if I see price in limbo, kind of inside the candle, I'm gonna just shoot the 50% level, and I'm gonna take that consequent encroachment. And on the 15-minute chart, you'll see how that could have been fruitful. Okay, I'm not saying that you would know about this and you would have an idea of really what was going on, especially given the context of the month of January and the context of really what's been going on with the market so far. At the same time, look at that. It's a reaction level, right? So it's going to behave like a reaction level. It's going to act like a reaction level. The only thing is, it's a minor one, even on the monthly chart. So, well, yeah, even on the monthly chart. Go down to the weekly. And because it's a minor one on the monthly chart, and it's a minor one on the weekly chart, and it's a minor one on the daily chart, I don't really like putting it on the charts because I feel like it makes it more cluttered for basically no reason, right? So that's controlling the clutter comes first, and putting these levels comes second. So that's why we're doing the monthly ones, all three. Well, you'll see. Okay. So this is a weekly chart. We take the open, high, low, and close. For convenience, I like to put two levels here. Even though the low and the close are the same level, I like to put two of these lines here. And the reason is because I can walk it forward into the next week. Just both of these, because see, the open and the low, they're different price points on the next candle, right? So I can just drag and drop, and it just keeps it organized, right? Now, interestingly enough, see what we have here. Okay, we have expansion, we have expansion, we have more expansion so far, right? Right? Does that make sense? Well, with an expansion comes an extended range that flattens itself out across the charts, right? So that means that I can mark another weekly candle. Check that out. Isn't that beautiful? And the reason that you want to mark out multiple weekly candles, multiple daily candles, multiple candles like that, is because sometimes you're actually going to get a reversal, and you're going to come down into this range down here, and you don't want it to feel like limbo. You don't want it to look like limbo because you have data back here, right? And it's valid data. So you don't want to not have that on the charts if it's not going to be too congested. Now down here, this could be arguably too congested. Let me undo that. But at the same time, they're just so close that these levels don't really matter that much. So let's go down to the daily. We see 1, 2, 3, 4, 5. And this is a very interesting property that I can show you, okay? I know so the correct way to do this is to take this first one and just do the daily candles like this, okay? So now that's the open, high, low, and close of that daily candle. And then we can also monitor that midpoint if we so choose. However, take a look on the 15-minute chart. Check. Well, I'm sorry. So on the 15-minute chart. So basically, what we end up doing is kind of just hanging around in limbo, right? What if I told you that wasn't limbo? Let's go back on the daily. Remember what I said about the 5-day look back. 1, 2, 3, right? So if we put 1 on the high, close, open, low. We go back to the 15-minute. What do you see? That's right. It respects it. So, even though, well, the quote-unquote correct way to draw this out for right now would be that little doji candle, right? Even though it respects it this way, if you have an idea and if you think that this might be happening, unfolding in front of you, you can actually switch between which candle you're looking at in the look back, right? So you can do any of, or actually any one of the past 4 weeks. You could do any one of the past 5 days, and of course the monthly chart you always have all of them up, right? But you can just pick one, right? And it's gonna do the levels. Isn't that neat? So let me reset this so that my chart is done correctly. And we'll move on to the NASDAQ. Okay, so I'll speed up. I'll do some, I'll do it a little bit faster. Because there's not really anything new that you're going to see in the NASDAQ that I didn't already show in the S&P and in Citibank, really. And 3. Okay, there we go. There's our levels. We'll go down to the weekly. Change this up. Okay, and do we want to go down further than this? Interestingly enough, seeing all of these monthly levels in with the weekly candles, that's fine, right? I wouldn't even bother. I'm not even gonna bother putting more weekly candles on there, right? And then the daily, we do 1 day look back. Okay. And we go down to the 50-minute and we're done. Okay. So in the NASDAQ, we didn't really show any respect for anything. Oh, let me show you what it actually did respect, because it did respect something, by the way. It's this. Okay. And I think that's the only level. Let's see, 1, 2, 3, 4, 5. Ooh, perfect. Okay. Yeah, so I would not recommend just kind of crossing levels like that, crossing candles like that. It's, man, it's doable. Um, there's tons of these, by the way. Actually, seeing where that consequent encroachment is, I'll just leave that off the chart because it's right there. I'm going to show you the respect. See? But I do not recommend doing this. It's possible It's an analysis choice that you could make. I just wouldn't make it because that's dodgy. That's like it's dodgy. Okay, so let's go on the Dow. There we go. Monthly. Oh, let me check the Nasdaq again. Yeah. Okay. I saw how few candles the Dow had, and I was thinking the Nasdaq. What was I using the continuous contract? That. Let me do that. Okay, so that's the past three, right? One, two, three. Okay, it's good. We're going to weekly. This one. Okay, and we're only going to choose one because that's a congested area. That's almost too much. I might actually pick this one, but yeah, that's fine. This is fine. And the daily. Let's see, one, two, three, four, five. Yeah, there's no. The Dow is brutal. The Dow is in a brutal consolidation. But you know what? Let me check something. I haven't seen the Dow chart yet, but I can show you. I can tell you. Was that 1800? Yep, 1800. It immediately respected it. And it respected the downside as well. Uh, there you go. So that's the Dow. Last one, Dixie. This is for your currencies. The dollar index is really a very powerful chart as well. It's very good for analysis. It's great for interest rate analysis, which just the idea of the interest rate markets, it makes me very irate. And I don't mean the bonds. I do not mean the bonds in that case. I mean the actual central bank interest rates. Those things and what they turn the market into. We'll do this one. One, two, three. Man, they turn the market into literally a game. It's nothing else. It's just a straight up game now. And it's all because of the interest rates of the central banks, by the way. Did you know what was the name of the European central bank lady? She actually came out on TV in a press conference, and she straight up said that the fact that money is out there and has value endangers is a danger to central banks. Like what the hell is going on in these people's minds? What are they doing? Man. So then we have the daily candle. Obviously, well, I hope it's obvious to you that we're only gonna pick one in this case, right? Because this one has this nice little protracted range. It has this nice level right here. If we plotted all of the levels on all of these, and actually, in fact, I might not even do a daily level on this. Um, we wouldn't have much of a chart to read. So yeah, down to the 50 minute, we'll see the respect that we have for these levels. Okay. See that? This chart likes these levels. Okay. So anyway, that was the methodology, the reasons, the ideas behind how I would put these levels on the charts. These mechanical fair value levels. I know, it's a brand new word. I literally just made it up for this presentation. Before that, I didn't even have a name for it. So yeah, you can think, I don't know. I don't know who you can think for that. I'm mad now because I got thinking about central banks. Man, okay, so quick recap. Monthly chart, we take all three of the candles, the open, high, low, close, and we can also fib out the middle. Okay. Weekly chart, we can take one candle. If the range is too cluttered, we're going to take one candle, right? If the range is protracted, if the range is extended, we can take as many candles as we want as long as they don't overlap too much, okay? On the daily candle, I'm sorry, so that's going to be 4 candles, okay? 4 candles maximum. There's going to be 4 candles that are sensitive. We're only going to pick one, okay? Daily chart, 5 candles maximum. We're going to pick one. It's usually going to be the first one, but if you expect an inside day and you see some inside levels from before, as long as it's within those 5 days, you can pick that extra day. You can also split days, you can straddle the levels, but I would not recommend that because that makes it read a little bit messy. That makes it kind of hard to track what's going on, what's being respected, what's being used, what's being traded off of. It's very difficult, but you want that you want like at most 1 day on the 1 day, unless you have a protracted range and it just kind of goes off into oblivion, and it just kind of goes off into oblivion. So in that case, you might want to put multiple days, but for the most part, you only want one. So anyway, that concludes this part of the presentation. Next, I will talk about validation and really how to start looking at these in order to really understand what respect means, really start getting read ideas about these, all that kind of stuff. Neat stuff, the practical stuff. So we put the levels, well, we know the theory, and now we're going to learn how to see it, okay?